Hey guys, Eric here, Gold Investment Letter. It's June 16th in the evening in the Midwest of the USA. I'm going to go through today just a few thoughts and give you some ideas of where my head's at in terms of where this market is going next. Listen, as far as gold goes, some of you have been with me a long time, some of you are newer. I don't have really any um, motivation. It was funny because I had a recent interview published on the Real Vision Presents channel on YouTube, and those typically get 10 to 50,000 views, so they're pretty well watched, and usually by a more of a sophisticated investor base. And I remember the first comment I saw on one of the videos that I did recently when I talked about, I think it was silver, and I used the word that it's going to explode. And one guy commented, because he's saying the word explode, I don't trust him. Like, I'm a hype master and I'm trying to get you to I'm trying to pump my silver bags on the marketplace. It's not the case. I mean, I'm gonna be blunt in this interview and talk a little bit about just the opportunities that I still see, but what we're dealing with now is a little bit tougher. Now, I just want you to take note of this chart right here because we're actually breaking out of um, a very bullish ascending triangle pattern. These are some of my favorite patterns. You could theoretically, oops, sorry, let me get off of that. You could theoretically um, go to something like, let's see, a big flagging pattern where it could go down, but we've already broken the channel on the daily, right? That was Friday. Um, and so we've gotten this recent break of this triangle. The next test is going to be where it popped to those previous highs in the $3,500 area, which is really not very far away, right? So I'm looking at gold tonight, and we are at let's see here, 33.93. So only $100 to go. It's not much. It's 3%. And it makes it a little bit trickier though, because what I do want to show you guys is, let's look at the daily. So what I see here with gold, by the way, is I believe it's about to break all-time highs and go somewhere in the neighborhood of 3,900 to 4,200 on this next leg up over the next 6 to 9 months. So that is still a pretty good move. You're talking about 25, 30% more upside. However, when you start to look back, like, this is a 2 year, actually, like more of a 3 year chart they use now on the weeklies. But, to me, when we were all up in here for years, and then especially I was on a series of podcasts on Real Vision. We had a series called Investing in the Minefield. I distinctly remember talking about this right here, this December 23 false breakout early in the month. And what my contention was really simple. We need to see gold break out and close a monthly candle above 2,100 to have triggered a all-time breakout, all-time highs. And I had predicted, even though I couldn't tell from month to month, we were getting very close. But I said, when you see that happen, it's time to go all in on gold and also the mining stocks, because my contention was that we would hit 27 to 3,200 within 9 months, I believe was my forecast. And as you can see, when that hit back here, let me just put this up. When we did have the close, it was March of 24. Okay. We had the close at 2177. And how long did it take to hit the target? We got there by October. So that was not a very long time to get in the 2,700 area, which is almost 2,800. And then you go a little bit further where we are in the 3,000s. That was within a period of like just 13 months, so all of this to me was no brainer land. Now we've got a situation where it's like, okay, what do you do next here? Because you don't have the no-brainer trade with the new highs. Because if you look at like a monthly chart, and you should note up here the RSI being high, this can stay elevated for a long time, by the way. So it doesn't necessarily concern me. And it also actually is why when I look at the daily breakout of the ascending triangle right now, we're going to go to that next level on gold, which is going to be the real clear breakout number, which is going to be that $3,500 number. And we could close there on a daily. And it's the reason these are things are important, guys, is because, if you're managing some of your own money or you're a professional investor, there are certain times, in my experience, to get more aggressive. And it could be on the polar opposites of scenarios. So, you know, it could be when a market is washed out, wiped out, dried out, and has been in a bear market, protracted bear market, and you just see value everywhere and you're willing to wait, just pick up the pieces and sit tight and wait for the tide to turn. That's certainly one way. The other way is from a technical aspect, when you're looking out and you're trading, and have more of a 6 to 9 to 12 month viewpoint, or even less. If you want to juice up your returns, when do you go heavy in call options, or make sure you've got what you want before it goes another leg higher? Because the verdict, the jury in this case, is a little bit still out, but not really, because we've had a breakout of this bad boy, this triangle, which is very nice. So the next thing that we're going to look at is that 3,500 number, which is not far, 3%. And gold has, nearly doubled in like 15, 16 months. So, or not even that long, it's been less than that. So that's a huge move for gold. So, but what I was talking to a friend of mine last night, and this is what I want to relay, because he said, I've got some cash that I need to deploy. What do you think? What do you like? And so I walked him through the fact that even gold, having gone up so far, so much in the last year and a half, doesn't feel expensive to me. It still feels like there's a lot of value there. So I just wanted to acknowledge that. And then when we get through this 3,500, I think that's our trigger, that we're going to new highs in a new range, 38, 4,200, somewhere in there. And, when you start approaching 4,000, I've got to believe, and we've started to see some of this, like on the smaller junior miners, some volume flows that are coming down. So we could, where is it going to be ignited? I would have guessed 2,500 to 3,000. We would have seen more money flowing into the most speculative part of the market already. We have not. That's good news for those of you that are underinvested in gold and silver and mining stocks, especially the exploration companies, because I think that by and large, they're extremely cheap. And I don't see cheap very many places right now. And so basically, physical gold, where does the price go next? I'm very bullish in the near to intermediate. I'm very bullish in the near term, because I think we break the 3,500 and we go a leg higher. Now, this is going to have to cool off at some point, but it could go right to 4 to 5,000 in this all run. I mean, look at how perfect this chart is. Since it went above the 50-day in early 2025. It has not breached that just for a moment here in May. But this is a beautiful looking chart. So gold has got, I think, some real legs to go. So I mentioned to him, you can have your physical gold exposure, and you can first and foremost start out with physical coins and or kilo bars or whatever, if you want to go a little bit bigger in money size. Have some physical with you around the house or wherever. But if you start to go in seriously, you can use the vehicles, GLD, and there's a Sprott and an Aberdeen ETF that I like. Those are a bit smaller than GLD, but they're also, I think, more trustworthy in terms of, do they have the gold there, getting audited, the whole situation with GLD. There's been some skepticism. I'm sure it's there, but there's been skepticism about because it's very large. So anyway, but gold still is this true store of value. Gold has been compounding at it's right at 10% a year since 1971, when we clipped the link to the gold standard in the United States. It's actually extraordinary, because it's doing exactly what it's supposed to do and has done. And we've seen this re-rating, this price discovery start in the last, year and a half. And I don't know where it's going to stop, but I do believe that if you look out a period of 5, 6, 7 years from now, um, inevitably gold is going to continue to hold its store of value in whatever currency is your primary currency, as basically an inverse mirror of that, meaning wages I earn today, I can put it into gold and then tomorrow, 10 years down the road, 20 years down the road, I can pull that gold, go back into fiat, buy the same things that are priced way higher in dollars and euros and yen, but buy the same amount of goods and services for holding gold. That's gold's purpose. If you want to get bigger returns, then we look at, this is one of my favorites, guys, is silver. Silver is so overdue. If you look at silver in the context of history, we haven't even broken the 1980 highs yet of $50. It tested that in 2011. This is going to be coming up this next time, which, by the way, we're at 36.31. Silver had a distinct breakout very recently here at the 35 mark. Okay, this is the weekly chart. This is a new breakout, and I believe it's going higher. I think we could see with silver 45 to 50 by October, November, December, January at the latest. So that's a pretty darn good move. So physical silver is actually harder to store and get if you have some real money to deploy. For example, if you want to buy a monster box of 500,000 ounces of gold, that'll cost you at these prices probably about 20 grand with the fees. And it's 42 pounds, though. You're talking about some pretty heavy stuff. So it's not necessarily, something that's friendly unless you really want to stack your garage full if you're like a rich guy or girl. But basically, there's a point of that to having the physical metals, I think, is important to a certain degree. And then what do you do from there? Well, I don't own SLV. If I'm going to mess with silver on a trade, I would at least buy the DGP on top of my long-term holdings, because this is it's a double long ETN. Actually, this one's of gold, sorry. DB silver. Sorry, that is a double gold piece. So I would basically say, if you're looking at SLV, buying call options on this could pay off really well. Now we have a gap on the chart right here. Not always, but many times gaps get filled. It essentially, this whole gap here occurred, and then you've got this one here. So a pullback and retesting in that, like the previous highs, is not out of the question, but you're looking at like a 7% downside with probably multiples higher upside. I don't see silver. Gold, for example, we look at, where it hit back in 80 and then in 2011 with the all-time highs, just over 2000. And now we are 70% above that previous high in 2011. And silver has another 40, let's see, where are we exactly tonight? We're at 36.25. So my math is going to say about 40%, a little bit less, 37, 36%, just to get back to the old all-time highs. It will be the triple top. And what happened on gold was we needed a quadruple top breakout on the long term. So it took a lot of patience, but when it hit, it was a very clear move. Silver is bound to follow gold. It always does. It always will. It has more of an industrial component, but it is also a monetary metal. People have used, civilizations and cultures have used silver for money as a medium of exchange for millennia, as well as gold. But, I think right now I'm really liking my chances in silver. Now, silver mining stocks, gold mining stocks, let's talk about that a little bit. I'm giving you insights that I gave to a close friend of mine last night who said, basically, I've got some money to invest. Where would you put it? And I said, well, we went through certain things. I checked if he's got his Bitcoin intact, all good. Does he have some of these other bigger cryptos that have been shellacked? And I write the Phenom, it's phenomcrypto.com, PHENOM crypto.com is the other newsletter that I write in the crypto sphere. And, basically, he was talking about how smoked he had been in a few of the top 50 names in the crypto market just in this last, 6 months. It's been brutal, actually, in that alt market, even though Bitcoin itself has just hit all-time highs and is going much higher, by the way, just so you know. Bitcoin's going a lot higher very soon. It'll break those all-time highs. It just didn't hold. Could see a little bit more consolidation or maybe one big shaking of the tree into the high to mid 90,000s potentially, but I'm starting to think it may not happen. but Bitcoin should be between 150 and 190,000 by January, is my guess. And so that's a big projection, just so you know. But silver, I told my friend, was somewhere that I would absolutely allocate money. So he has some silver coins and gold coins, but he ordered some more of both, and then was very interested in the ETFs to get exposure to palladium and platinum, which I also really feel are going to start to re-rate against gold because they just have been in a shit market. But let's talk about silver first. So if you want exposure to silver, you can have physical silver, you can have SLV, but these charts don't even do it justice, because if you really want to look at the history of silver, you have to go back 45 years. Silver was higher than it is today, which is incredibly crazy. It used to be like this conspiracy theory where a lot of people had essentially in this side of the business would talk about manipulation in the gold and silver markets, particularly silver. And that very well may or may not have been the case. I never stress it because I know that longer term, certain things that are manipulated can be delayed but not denied. Doesn't even matter if it's the government. It's going to end up giving way at some point. And so anyway, the silver situation, to me, not looking at any conspiratorial things these days, just looking at it as a metric against the gold move. Yeah, we're going to $100 to $200 silver. $100 to $200 silver is going to happen in the next few years, I believe. It's going to be a violent move, though. And so I would really encourage you guys, now that we've got this breakout that occurred right here, just this is a weekly chart. So last week is the breakout of silver, where it went above $35 and closed there on a weekly basis, right? So let me just pull that up really quickly. So this is the continuous contract, 36.31. I have a strong buy on silver for all of you. This is just my thought. I think it's extremely cheap. There are so many different reasons why it's going to go higher, not the least of which is, being known as gold's wild cousin, always following gold, but lagging gold typically, but being more violent in its moves upward or downward. Nothing has changed there. So now it's got to play catch up. And this recent hit above those recent highs at 35, this is nothing for silver. If gold can almost double in like 16 months or whatever it is, 14 months, what do you think silver can do in like 15 months? Silver could quadruple in a year and a half, right in our face. I'm not saying it would hold that level long term without a big correction and a basing period, but there are a lot of things, like there's going to be so much demand coming in to protect wealth. I see it on the cusp. It's funny because I'm this crypto guy in the gold world that got a lot of flack when I, came out with that recommendation. It was like blasphemy to the gold bug community. Some people took me up on it. I know that there are folks that have paid for literally, I put a challenge out at one point when Bitcoin was around $5,000 and said, just if you don't believe in this or don't understand it, and you think I know a little bit about what I'm doing, just buy your children one Bitcoin and it'll either go to zero or you'll be able to pay for their entire college tuition in cash. And I'm talking about a doctorate from Harvard. That is on pace, guys, there. And some of the feel in the gold market, it's tougher for me right now to give you an assessment other than I know short term, or I feel short term. We're about to break all-time highs. Should take us into the $4,000 area or range. Silver has 30 to 40% upside by the end of the year. Now, probably a minimum of $44 to $45. So you're still looking at 22, 25, 27% upside in the physical metal, where you don't even take any risk on the companies. Also, so let me get into very briefly where I also see value, which is in platinum and palladium, the other precious metals. So platinum is ripped up quite a bit recently on this breakout. See what I'm saying? Where you have these previous highs. You can see the circle here with the browser going straight across. These aren't coincidences that those tops are, where this thing turns back around. So we needed to see that break, and we've seen that. We've seen that in May. And look how much, platinum has gone higher since then. You're talking about 1050, went all the way to 1300. So 20 some percent, high 20 some percent move in less than a month. Uh, Palladium has not had its day yet. And with these, you can buy the physical stuff, if it's something that you're comfortable having physically, that's great to some degree. Mostly it's important to have physical gold to some degree, some silver. And I've been accumulating platinum for the last 2 years on and off. And it started to add up, and now it's really going to start to add up. Physical palladium, not so much. I don't own any of that, but I do own, and you can see this with this chart, with the palladium chart, it looks wonderful. It hasn't had that rip, but it's going to catch up to platinum. So palladium is even cheaper than platinum, and platinum is the cheapest it's been in a long time versus the price of gold. Silver is the cheapest it's been for a very, very long time versus the price of gold that I can remember. Just the gold to silver ratio is way out of whack. Even if it gets back to a median, you're going to see silver outperform 2 to 3 to 1, for a patch of period of time going forward. So it's very important to just check it on the metals markets. And then from there, though, and let me just give you the idea that I own in, like, this is like my Robinhood account. Okay. There's physical platinum is PPLT. If you just want to own the physical, the ETF, you can do that at PPLT. There's a palladium ETF that I like, that I've been buying quite a bit, and that's PALL. So, you can get your exposure if you want it digitally and don't want to worry too much about storing the stuff, shipping it, and paying extra fees on the markups and things like that. I'd like to have a nice little stack in my possession or in, proximity, but then with bigger portfolio allocations and things like that, I do buy some of these ETFs. I know they're not perfect, but I own a ton of my crypto on Coinbase. The whole perception of why you get Bitcoin is to be decentralized, have your own keys, cold storage is the way to go. Well, listen, I mean, I understand all that, but I'm also the guy who's lost two of my cold storage treasures. I think it might be three actually, which means that I put a bunch of Bitcoin and Ethereum on those things with the thought that I would have them, in one of my safe boxes or whatever, and you know, vanished. Maybe they're in a box somewhere in one of my places, but it doesn't mean I trust myself with these things either. So the ETF's fine with me. So those are really good opportunities. The other thing I wanted to point out is SILJ, the Amplified Junior Miners ETF. So I own, a good amount. I've gone between like 10 and 20,000 shares of this. And I'm above the median there right now. But I put a little extra on the 20,000s, a little bit much, just based on the rest of the silver that I have in silver miners. But so I took a bit off on this pop where I bought it around 12 and it went to over 15. So now I think I'm at 15,000 of the Amplify Junior Silver Miners. But it's a great way to get exposure to the space and be automatically diversified. Okay, this is where you can put some real money also, by the way, because it's extremely liquid, as are all of these ETFs. I would buy SLJ over SIL, but you could buy SIL if you want to be more conservative, but be more aggressive than the physical price of silver potentially. SIL is the Global X Silver Miners ETF, much bigger companies, producers, things like that. But there's going to be a lot of torque in those juniors. And so I would encourage you guys to shore up your silver holdings right now. We see the break of 3,500 in gold. You've got to make sure you've got what you want physically, and then also going shopping for gold and silver stocks, and then also the platinum palladium play. I think is great. Um, so look, so why don't I do this and keep this short and do a few of these this week for you guys? What do you do in terms of like individual, those of you that follow individual names and like to be involved in special situations like I'm a junkie of? uh it's funny because people have mixed impressions of whoever is talking, right? I mean, and what the motivations are. I obviously don't get a piece from Deutsche Bank, for referring people to buy a platinum or palladium ETF. So I'm not talking my book here that's going to be anything meaningful unless one of you is an $80 trillion pension fund manager. But even then, I wouldn't count on it. So so I'm not really talking my own book in the sense of like trying to pump my bags on my my free e-letter readers and subscribers. I'm just talking about what I see now going forward. Where's the value propositions? And, you know, when you get into the individual companies, I'm just going to give this as a precursor. These are deals that I own a lot of, and they're deals that if you guys start to buy them and they move up because of that, I will be benefiting, at least on paper. So that's important. And even with like the one that I'm going to talk about today, that I just want to nail this home. One of the best kept secrets and trades in the gold mining space are these development stage monstrous asset in the ground, tons of work, feasibility study type of stages, pre-fees, feasibility, bankable feasibility, getting ready for the final permitting stage to build a mine. You have these things like Seabridge, Nova Gold, um, Vista Gold out of Australia. There's others where you've got massive deposits are already proven. These things have been drilled out decades ago, and they have a resource that's clear, and you know what you're paying for price in the ground. What hasn't happened yet is we have not seen, we started to see it a little bit here, but we have not seen anywhere near the fair valuation that these companies deserve. So, like International Tower Hill Mines is my biggest bet in this area because the producers in the gold space have all continued to hit new highs with the price of gold because that goes directly to their bottom lines, right? And so that hasn't trickled down all the way to the small juniors yet. I believe that it's going to. But the phase and stage right in between those two, where you've got huge torque and potential for a big move, and not, in my opinion, like enormous downside. I mean, yeah, in a wiped out market or something, could International Tower Hill go back into like 60 cents or 59 at the 200-day moving average, or 50? It could, but I think these days are long gone. And it's because the reason I love this stock is because, back in 2011, so you talk about 2011, and, you know, that was a situation where International Tower Hill Mines, I recall when it was trading over $10 US a share. So we've got 14 years from them, a ton of work and money spent in the interim in Alaska at their Livengood project, and it's trading at 89 cents. And you've got this mixture of like, the company doesn't need me. I'm actually an active consultant to International Tower Hill, so you should know that. And that's because this, I believe, is one of the biggest opportunities in the gold stock market. And if you look at, for example, let me annotate the chart. I just want to show you one line. And I think, frankly, this is like ultra conservative. But what happened there? Here we go. So you look at this line. I'll keep it at the low part, not including the wick highs, and everything is pointing to $3. That's this channel up down here, okay, to there. So just trading within the channel. This goes back to 2012, guys. Like, it's going to 275 to $3 is what I see happening very organically, very naturally, for International Tower Hill. But what I'm most interested in, so what you can do with this type of stock is you can put real money into this one. I have real money into this one. And so you go to 250 to $3, sell a third or even a half, get your principal risk out, and let the rest ride. There's no telling how high some of these gold plays. I mean, they've got like almost 14 million ounces of gold resource at Livengood. It's in the over 13 million ounces. And so the valuation that we have is just, it's way too cheap. Let me just check THM right now, and then I'm going to move on quickly and end this up for you guys tonight. Hopefully some of you can be chewing on it, but we're at 184 million. So I'm going to guess that it's going to be a little bit off, but if you're talking 13 million, 1250 an ounce in the ground. And then, you even can look back to this redefining of 43101 rules back in like 2015 or 14, I believe it was, where some of these groups, they had to pare back their actual 43101 resources because it's not really that important, but it's a geological model that was essentially saying you can't include this in your 43101 category or keep it in your PEA pre-feasibility study because you have to do X, Y, and Z to include them. And so there was 20 million ounces when that rule changed at Livengood, like publicly. So there are, I believe, 20 million ounces or more there. We don't need to find any more gold at Livengood. It's just a matter of the fact that you have a perfect storm where everybody was saying, Alaska, California, don't touch them. It's going to be tough to get permitting. I've done a lot of talking and work with Tower Hill on this, and they're backed by some of the biggest, best money in the entire world. John Paulson's fund owns over 30%. Tom Kaplan's fund over 12% or 11%. At Electrum Group, you have Mr. Hathaway from Sprott, another 10, and then Kopernik Funds, which is run by a very, very smart guy that has generalist money under management, but has taken about an 8% stake in Tower Hill. So we've got a situation here where you add up the top 4 shareholders and they own over 70% of the float. So like, it's not going to be, this is very unique with this situation. Where should it be trading? So if you want to go to buy gold right now, I mean, we can even look. What are you going to pay per ounce for buy gold? Let's look at an American Eagle, okay? There you have it. Half ounce, 1829. Okay. So 34.79 on top of so that is what, 2.5% above markup. You're looking at this is what you're paying for a gold coin in your hand. $3,479 to buy a physical coin. You buy shares in International Tower Hill and you're paying under $13 per ounce of gold in the ground. This is what I call leverage. This is what I call opportunity. And, I'm ultimately expecting not only for International Tower Hill, THM on the US side and ITH on the Canadian side, THM being the most important and the most liquid. I'm expecting it to go retest those 2011 highs, which is $10. You're talking an 11 bagger from here. And then best that as well. The longer and further gold goes. And these deals are coming into play. Somebody's been catching on. And ironically, if you're one of our elite or premium members, this is why people join that service. It's because all in here, all I talked about to elite and then premium members for months at a time, they had carte blanche to buy a position in a quiet market between 45 and 55 cents US. I came out with this here. I believe it was a bit higher for the e-letter readers, but it doesn't really matter that much because this thing is still dirt cheap in my mind, and there's a ton of opportunity in Tower Hill. And now we did just get this pullback here. Shoot, I mean, if you see this go down to 85, I think that's probably going to be about it. Maybe you see, I don't think this is going much lower, if at all. I think this is your entry point. And if you have a little bit of patience, you can pay up to $1.10 US on THM all day because you still have 200% upside on my low end target, which is simply to follow the top of the channel that you saw visually towards $3 a share. And then you can see, and maybe I'll include it in the email. There's a chart of from bigcharts.com that I use with Tower Hill when it was at $10 in 2011. That would be the next major benchmark. 3 is going to show some opposition. It might take some time to get through there, but then it's like, you're going to 10 after that. And after 10, it could go anywhere. I'm not really looking past that. But what I love about this is that you could go into THM here heavy up to $1, especially if it goes down at all. Accumulate yourself a nice position if you haven't already. And then when it gets in the $2.50 to $3 range, take your principal out and then just play it on the house. That's the way I do it. That's the way I encourage people to do it. And, this is one that I've got a high, super high, very high, extravagantly high conviction on. So that's one idea for you. I'm just going to throw in really quickly. We've got a real opportunity in this being my biggest holding, as you guys know. Phenom Resources. This is a gold exploration play in Nevada for, incredibly huge potential exploration projects that have been vetted through David Matheson, who's on the board of directors and, is very, very prolific in terms of discovering huge things in terms of gold assets and deposits and eventually mines in Nevada during his career. So I'm very excited about that. You also have the vanadium side of the business, which I believe is worth more than the market cap of the company by itself right now, probably twice to three times that. And that will become more evident and be spun out when you get more of a pulse in the vanadium market. I've really got, I think, a good hold in the critical minerals area, which, what's going to end up moving. You've got things like antimony that have gone up like 6x in, a year and a half. You have other things like vanadium, which has had like a stuck market, but has moved up marginally in US and Europe terms, but not in China. China doesn't have the incentive. What they have the incentive to do was to keep prices low and put everybody else out of business. That's why they control the supply chain in critical minerals. So I've, been in touch with senior related officials in Washington about the need of the vanadium critical mineral, where that's at on the totem pole of these folks, and it's up there. And so there's no question this is a critical mineral that we need some serious uh there's going to be a lot of serious light shown upon it. So I would suggest that while you've got this pullback down to where we've seen the lows before, you can see me dragging the browser, it's touched down in the mid 20s before and bounced. And I think it was such, these last couple days was like very low volume with with it pulling back, but it looked like it was starting to go again, just like less than 2 weeks ago, spiked into the 40s. Very, very solid shareholder base, and one that I think you can also consider in your more speculative area. I'm not an active advisor or consultant there, but I am a large shareholder. And then like Metallus, this thing looks freaking amazing. I'm expecting them. They announced a financing at 16 cents Canadian. They're probably going to close that this week. And then I think it's off to the races because of their property almost adjacent to the Stibnite mine being built by Perpetua, not Perpetua, which I was always calling it. PPTA, which has received, almost 2 billion in government grants and loans to build that mine, expedite the mine because they have an antimony byproduct to their gold. Go back into Metallus's field program results from last year. You'll see super high grade antimony, silver, gold. There's a number of minerals there. It's extremely rich and robust. So they'll close on maybe 1.4, 1.5 million for that placement. It'll be oversubscribed from what they had announced at 1.35 million. And then there's not going to be a cap on the stock. And they're going to be mobilized, towards drilling. And that could be as soon as July. That Greyhound project is extremely special. It's private land and it's never had modern drills. But look at the grades they found laying on the soil. I mean, it's crazy. So I'm very confident that Metallus is going to come through. There's not going to be one of these like 10, 12, 14 hole programs where you just don't have anything hit or something. It's going to be weak numbers. This is going to be really interesting. And I think if they come out with anything near what I'm expecting that they will, towards the fall, Metallus will be in play quickly. And I've told the CEO that I think all he needs is 2 drill programs that show that they've got what could be possible here. And you've got such a low market cap on this and Phenom. LFF. Let's go to the US dollar side. How much does Metallus worth? 10 million, 10.5. Call it 11 million bucks. And, their neighbors over $1 billion, much further along, obviously, but this is also one I like a lot. So there's a few stocks for you, a few ETF ideas, a few comments on the market of where gold, silver is going, the fact that I like platinum and palladium right now, how you can buy those, etc. But I'm going to leave it at that for tonight, guys. Cheers.